Welcome to ForexTV.com. Today is December 23rd. I'm Kathleen Reddington with your New York Forex Market Buzz. The Japanese yen drops for a second day on the euro and the dollar. And now for a look at the latest headlines from the CEP News Desk. New home sales in the U.S. fell less than expected in November, falling to an annualized pace of 407,000, a 2.9% decline from October. Economists were expecting a 4.2% fall. U.S. existing home sales fell to an annualized pace of 4.49 million units in November, which is an 8.6% month-over-month decline. Economists were expecting November's sales pace to fall to 4.93 million units. And the real U.S. GDP contracted by 0.5% for the quarter, which was expected, following a 2.8% growth rate in the second quarter. Today we are joined by John Person of National Futures. Hi John, how are you today?
I'm wonderful. Thank you for asking. I hope everyone's having a wonderful holiday season.
Oh, indeed. All right, so the housing market is key to this economic recession, and today's home sale numbers hit 17-year lows. Do you think that we still have a way to go before we see a bottom in housing, and what needs to be done?
First off, I don't think the housing market will recover. I've been saying that it's going to take at least 5 to 10 years for the market to recover, because there was just an oversaturation of homes, condominiums, townhomes built in through the exuberance of what happened from 2002 into 2005 and 6 and continues to this day. McMansions, the oversized homes. It's going to take a policy of either new home buyers. What really sparked this home is a debate, but people weren't just buying their first home. They were buying their third and fourth and fifth homes as investments, and that's what's really people are getting stuck with in the majority of speculative bubble areas such as Florida and California. So I think that it's going to take a number of years for this market to bottom out in the housing, and we see hints of that coming to fruition as home values have been declining steadily. Mortgage rates are going down, but yet no one's being able to purchase new homes. There's a lot of refinancing going on for these homes, but there's no real massive amounts of new home buyers being attracted to the business. What has to happen? A few things. First, I think that banks have to obviously lend, and that's not happening. If you are a buyer with 20% cash down as it used to be, a FICO score of over, or a credit rating score of over 700, then you're sitting pretty in a buyer's market. But I still believe that we're probably going to see lower prices coming into the first half and throughout much of 2009. That's my opinion.
All right, and the negative housing numbers did bring down the dollar on the euro this morning. It's bounced back a little and is pretty much flat now. This pair has been very volatile lately. I want to know what your euro-dollar strategy is for today.
Well, it's interesting because the last time I was on Forex.com TV, your questions were what was my opinion on the euro currency, and I look at a product that I've put together with another gentleman, Jeff Hirsch, who is the editor-at-large with the Stock Traders Almanac. We came out with a Commodity Traders Almanac, and in that we listed 4 major pairs, one of which, of course, being the euro currency, and looking at the data that we extract from the futures industry. We have data that goes all the way back since the beginning when currencies were first traded in the 70s. Seasonally speaking, the euro currency, even though it's only been around 10 years, has a tendency to rally on or about the third week of October into the end of the year. And we saw that seasonality hit to a large degree this year. It was a kind of a lingering effect, because the low was actually hit on or about the third week of October when we hit that low around 123 and change. Now that we saw the euro currency hit over 144 in an accelerated move last week, the week before, I believe that the euro currency is going to consolidate and pause here, but coming after the first of the year, anything over 142 to 144, I think Forex traders pay heed to this. There's a seasonal tendency for the euro currency to decline on or about the first week of January going into March, so against the U.S. dollar. So look for any higher prices between now and the first week of January as a selling opportunity between 142 and 144.
All right, and today we had a public holiday in Japan, and we're approaching the Christmas Eve and Christmas holidays this week. Do you think we're going to see added volatility because of the thin liquidity, or do you think things will stay calm and flat?
Well, it's interesting because normally we see volatility, but this time around, because of lack of liquidity and players being absent, but this time around we started to see, at least in the U.S. equity markets in the last 10 trading sessions, volatility decline. Looking at the VIX being under 44, 45, we're starting to see volatility levels decline. And I think that that's going to be prevalent going into year's end for most of the major markets. I don't think people are going to be, if anything, lightening positions, or we see a little bit of window dressing as people and funds, if there are any, whatever hedge funds are left after this debacle, will be addressing and posting positions. I think we see a lot of that happening in the treasuries right now. And as far as the foreign currencies are concerned, I just really don't think we're going to see much more of a move. With the euro currency and that seasonality trade that I've just talked about, like I said, if you get an opportunity, this market rallying between 142, 144, which I don't see really happening, but if it did, that's the one trade that I look for as a free lunch, so to speak, trade going into the end of February into March.
All right, and before we let you go, being that we're coming up on the end of the year, I just want to know if you have any predictions for the new year.
Well, yeah, I think it's going to be kind of interesting that we saw certain commodity markets with, like, for example, gold, the U.S. dollar-based commodities like crude oil. We've seen a major debacle, and I think we see those markets kind of rally, and I mean, it's probably not a hard prediction at this point to say, hey, we should see crude oil bottom out now. But seasonally speaking, there's another thing that I like to look at. Crude oil traditionally bottoms out, forming lows in late December, early January, and rallies going into May. My prediction is that I think we see, quite frankly, the dollar strengthen a bit as the U.S. is perceived to be coming out of the recession, or bottoms out in the first quarter of 2009. So that may support or substantiate the seasonality that the euro goes down against the dollar after January for the first quarter. So I'd look for the dollar to rally against the euro throughout the first quarter of 2009. Look for crude oil to rally. Gold, if it does move up January, February, March, I think gold will be an overbought situation, and those are my predictions for the first quarter of 2009.
All right, John, thank you so much for being on the show today.
Thank you for having me. Wish everyone a very happy holiday and a safe one at that. Thank you.
This has been your New York Forex Market Buzz with John Persson of National Futures. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.